Good afternoon, everyone. We will give it a little bit of time for people to start rolling in. I know everybody kind of rolls in late. We do have some a guest today, so it's kind of cool. We'll bring him in later or now, Raj. So look, today we're going to talk about some good stuff. So stick around. So we're doing the giveaway a little bit different. Raj suggested that we do the giveaway as soon as we get 50 likes, which I think is a pretty low threshold, and it will hopefully get the people that are in here to win something, their little assessment quicker, and it'll keep people around that actually want to stick around and listen to the advice that we have. So also on the giveaways, if you've won a giveaway before, we're not going to allow you to win again. We have some people that have won multiple giveaways, and it's not really fair to the other people that haven't won yet. So we want to try to start limiting the people that have already won. So if you've won before, you cannot win again for, I think, like 90 days seems fair. So that's what we're going to do. Cool. So we'll jump into the slideshow. And as I said, as a reminder, as soon as we get 50 likes on the stream, we will do the giveaway. So however long that takes. So today's webinar, how to use tags effectively and track and improve. This is huge because, I've seen some people using it in a way that's very creative, but it's so chaotic. It doesn't add much value. So you got to kind of pull back on using so many tags and really identify what tags should do for you, and then how to actually look at the tagging to get value from it. That's super important. So your challenge from last week was track your triggers. Every time you feel frustration, revenge trading urges, or FOMO creeping in, write it down. Keep it simple, and keep a log. So, a little bit more of an add on this. I prefer a method where as soon as you take a trade, regardless of the outcome, right? A lot of us are outcome driven. We feel a certain way after the outcome of the trade. So if it's a winner, we feel great. If it's a loser, we feel not so great, right? So a really key component is after each trade, either winner or loser, go into the journal and do like a top-down assessment from head to toe of how you feel. Look for things like, hey, I have tension in my shoulders. I was holding my breath. I feel frustrated. I'm breathing, rapidly. I'm clenching my mouth, something, right? Different things, different nuances, and do a head to toe assessment after each trade. And then after you do that, you're going to find a area after a certain amount of trades, either a certain amount of losers, it could be 2, 3, 4, 5. And you're going to notice that you're going to have some nuances in your body that indicate that you are losing your logical thought process and you're getting more into an emotional state of mind where that jeopardizes your trading. So if you start by doing that, you're going to learn more about yourself. And that's one thing I like to do, as well as just trying to document the raw feelings. Go and start with a baseline. And from the baseline, determine where your trigger is, where your threshold is, and it's going to lead to a lot better trading. So let's get back on topic. How did everybody do? Did anybody last week do this? And if they did, could we please, get somebody to say it in the chat, and we'll talk about it a little bit. If not, we'll move on until later and maybe do a follow-up. So what is trade tagging and why do we do it? So trade tagging is a method of labeling trades to track and analyze performance, right? It helps you to identify patterns, refine strategies, and avoid emotional decisions. Without tagging, you are trading blindly without actionable data. And this leads back to why it's important to actually look at the data and not go based on how you're feeling or your P&L and stuff like that, because you get a lot of confirmation bias and you get limited feedback when you're actually doing things right. And you get really bad positive feedback when you're doing dumb stuff. So this is why it's very, very important to be in tune with what's going on. So back to the actual trading and tagging and all that stuff. Next slide. So there are different types of trade tagging that you can do. And there's different levels. So you could have both positive, neutral, and negative. Neutral is more of one that we added more recently. But the more complex you get with tagging, the less useful it becomes. So initially, when we first started discussing this, we actually thought about particular behaviors that would be perceived as good, green, right, positive, and then negative behaviors. And then we were going to limit the list to those behaviors so you could really look at the data and figure out how to improve in those areas. Because if you don't know how to improve, then you're not going to have a really clear path to get better. So going back into this, you have the different technical tags, which would be you're using the system more to identify maybe alternatives to a primary setup. So let's say you're looking for an imbalance pullback or something like that, right? Whatever you're trading, if you're trading ICT or volume profile, whatever your style is, you have a primary setup, and then you have a subset of that setup. That would be something like, hey, imbalance pullback with a trigger of some sort, or something like hey, I saw reloading on the tape, right? It's an order flow thing. So now you're using that to tag the setup to maybe give you extra confluence, or you can use them as more of a personal approach where you're like, okay, on this trade, I felt FOMO, I got into the trade early, and you tag it. Now, here's the key to using the tags, right? In the personal tags anyways. If you start tagging FOMO and when you feel FOMO, and then you look back in the data and you see a correlation between, hey, I feel FOMO a lot on Mondays. So now you know, right, based on data, that Mondays, for whatever reason, you get into a lot of FOMO trades. So now that you know this data, you can actually create a clear plan to get better. You have a clear objective on Mondays, and you can say, hey, I know I feel FOMO on Mondays. Let me see if I can create some type of interrupt, right? Logical step to stop myself from doing, the FOMO thing where I just jump into a trade because I feel like I'm going to miss it, right? Really important. So tether tags, connect emotions to trade outcomes, held too long, cut too short, improper risk. Those are all the tags I feel that are very core. Now you can get crazy complex with this, but the more complex you get and the more you're basically just creating new tags every day, you're not going to get a lot of value from it. So as a trader, you need to sit down and figure out a core group of positive trades or tags, neutral tags if you want to use neutrals, or negative tags, and then figure out how to use those in a way that's very structured. So each day you're using the same tags so you can continue to get the value from it, right? Tags like early exit, over risk, miscalculated risk, stuff like that. You got to figure out what works for you and then continue to use those tags when those issues show up. And then after you figure that out and you've tagged, then you can look into the data and figure out, well, I tend to over risk after I've had a series of winning days, right? Now you're looking to hone your edge. You're looking to get better, and that's through the data versus just filling around in the dark. Okay, so next slide. So defining your tags, as we just talked about it. It's really important to have an idea of what you're going to do before you do it. Because if you're just creating new tags every day, there's just not value there. So this just circles back to what we're already talking about. So try to figure out a system, have a hierarchy for the system, and then utilize the system the same way each time. You want to build consistency in the way you're managing the data and tagging things, because if you have a lack of consistency, both in tagging trades and tagging just regular tags, you're going to be inconsistent, which then is going to translate into inconsistent trading. So you have to find a baseline and have consistency. Yep, next slide. Rush, next slide. Oh, there it goes. Review and analyze filter trades by tagging to identify profitable patterns, adjust your strategy based on data insights. So this would go into where you're using the tags to identify subsets of maybe a plan that you have or a setup that you have. And what you're doing is you're basically adding extra confluence. So, hey, you know, I'm looking for an imbalance pullback. And by the way, we had a gap higher, right? So now you have gap higher as a tag. Your setup's actually an imbalance pullback. And now you know, hey, when this and this happen, there's actually a higher win rate. And you can go through the data to filter it to actually see in the data how well your P&L would be if you only took those trades, or if you filtered out these trades. Like that's how you get better. You get better through the data. All right, I think we're done through that portion of the slides for now. So we'll have Matt get active and start talking. I think I hear him clicking away over there. He sounds busy. So we'll get Matt in here, and we'll start talking about a little bit about what we already kind of touched on, and then we'll maybe open it up to some questions. But as far as the giveaway, just a reminder, as soon as we get 50 likes, we will do the giveaway. All right, Matt, what do you got? What do you got on all that?
Oh, I was supposed to, no, I'm kidding. Anyway, so yeah, no, so to me, and I want to do a quick aside here before we get started, and I apologize to everyone. I haven't been as active, especially in the Discord, the last couple of weeks, as I've been building out some new offerings on my site, some of which you guys are going to hear about very soon, some good features education that will hopefully help you guys out. But I want to just, before we get started, because I haven't done an event here for a while, I want to make sure people understand something, because I see a lot of people come into the Discord. They ask a lot of questions, which is great, right? You want people coming in and asking questions about everything that happens, right? Closed mouths don't get fed, unasked questions don't get answered. But I want to make sure people are framing things right when it comes to specifically the futures desk. I think it's a mistake, and I know that Josh and Brian and Raj have said similar things, but for me, who I consider myself friends with all of those guys. The reason I do these events and I'm willing to associate my brand with the futures desk is because I believe in what they're doing. And quite frankly, they're not interested in, like, same thing with me in education. I'm not interested in churn and not interested in people just coming in, looking for a 6-month trading career and YOLO this and YOLO that and right off into the sunset. We're looking to make 5-year traders, 10-year traders, 20-year traders. So make sure, guys, when you're looking at something like the futures desk, that it's not fair, quite frankly, to them as a company to lump them in with some of the other names out there, because they don't have the same objectives. I think, Josh has been especially really upfront. They're following the traditional prop firm model. So the tools that you see, like tagging, right, like a built-in real-time journaling, all the reports planning and stuff like that. So guys, I have a couple of evals with the futures desk that I use to evaluate strategy other stuff that I'm working on. So for a relatively low cost, for, what was it, a couple $100 up front and a maintenance fee and an occasional reset, I'm able to put a strategy through the paces in ways that I've never been able to do before. So the type of stuff that they're doing is just as valuable to me as somebody who's been trading full time for over a decade now, as to somebody like you who maybe is just getting started in their career. So when you're doing stuff like labeling your setups and tagging your trades, and I agree with Brian, I think it can be you're doing yourself a disservice if every trade has 20 tags on it, right? I think for me, 2, maximum 3 per trade is what you should be doing. And really total, you should have no more than about 12 to 15, depending on your individual issues. For me, tags are not necessarily something, and I don't mean like tagging setups. I mean things like, FOMO or chasing or bag holding or entering too soon, exiting too late, things like that. So separate from the actual trading setups, I think you're doing yourself a disservice when you put 20 or something of those on. And for me, those are more helpful when you already know your strengths and weaknesses as a trader, as much as they are finding out your strengths and weaknesses with the trader. I just had a conversation with a guy about an hour ago that I was actually interviewing for a spot at Cericius Trading. And he made some really good points as well. And that's the whole first year of your trading career should be getting to know yourself as a trader, right? Because you're into these situations where, guys, I have worked over the years. I have been a full-time options coach, futures coach. I've put together courses. I've been at the forefront of this industry for quite some time. I understand the urgency that especially some, quite frankly, of the other funded companies put out there, because they want you churning, they want you spending money, as opposed to, you're really, if we want to be very specific, those companies, you're renting an account at a place like the Futures Desk. You're basically buying a home, right? Because they want you here long term, and quite frankly, it's a place you want to be long term. And so you're able to then learn who you are as a trader. Your entire first year of your trading career, and I'm not saying you can't make some money. I hope you get to a live account. I hope you get to the point where you're taking some consistent payouts, right? But your whole first year is getting to know yourself as a trader. What are your strengths? What are your weaknesses? Now, I got started as a small cap stock trader, which I really recommend if you enjoy punching things. Because that's something that happens quite a bit. They say the first step to becoming a good trader is locate your nearest good drywall repairman. I've never actually punched a hole in the wall. I threw a mouse once, and that across the room, and that broke. Thankfully, it was one of those old cheap Logitech mouses and not some of the nicer ones. But there's going to be frustration, there's going to be pain, and it's how do you respond to that pain, right? Mark Douglas, the one of the first practitioners of trading psychology, likened consistent losing to legitimate psychological trauma. And there have been studies to back that up. Now, I'm not equating this with anyone who's, gone to war or dealt with any kind of abuse or anything like that. But what in any life that you deal with trauma, whether it's, trauma from relationships, trauma from upbringing, or this or that, we all know trauma needs to be addressed and dealt with. Otherwise, it's going to spin into more problems and more trauma. In trading, it's no different, right? If you come in and you're consistently, and guys, I just, we're going to keep this stream PG. So I'll say I got my butt handed to me as a small cap trader. I lost $40,000 in the first 6 months of trading. That was not in a funded account. That was my money. That was money I spent about 8 years saving from all the little odd jobs I was working before I became a full-time trader. And there was legitimate trauma in my head that I had to get over and deal with before I was able to successfully trade. I really wish that there was a system like what TFD has when I got started, because one of the things the thing I struggled most with was chasing, right? FOMO. There's, especially in a small cap stock, you always, for those of you that have never traded small cap stocks, it's not uncommon for a handful of them. We're talking $2, $3 stocks, penny stocks, to go up 20% a day, 50% a day, 100% a day. And if you want to know back, we're talking about 2005 to 2006-ish, or excuse me, about 2014, 2015, any of those stocks that were going up 30%, you're like, who's the idiot that's buying up 30%? I was that idiot. Okay. Me and several thousand of my closest friends. So I really wish a system like this had existed at that point, because once I came up with a system, and I basically would not allow myself to buy a stock if it was beyond its daily ATR. So for example, if I'm buying XYZ and it's 100, or it's at 100 at the open, its ATR, daily ATR is 3, and it's at 103.50. I'm not buying it, because it's, statistically speaking, it's going to have a pullback at that point. Sure, it's going to occasionally, they're going to run, et cetera, et cetera. It's no different than futures, right? You'll look at the NQ and say, okay, our 5-minute ATR, God, our 5-minute ATRs are insane right now, but let's say it's 30, and you want to get long on a candle that's up 50 handles. Statistically, that's not the right move, right? Because statistically, we're going to have, in theory, we're going to have a pullback. Now, here's the thing about chasing, bag holding, oversizing. If it never worked, it wouldn't be a bad habit. You'd never, every time you touch the stove, your hand caught on fire, you're going to stop doing that very, very quickly. The devil with these mistakes, and especially these mental mistakes, is that they work just enough to keep you doing them. I remember in a small cap stock, in this is honest God truth, in less than 5 minutes one time, I made $5,000 chasing a stock that was going from $2 to $15 in the same day. Okay. I felt pretty on top of the world at that point, but you know what I did? I gave every dime of that money back over the next 3 weeks on doing the same thing. Oh, well, I remember, I think it was AQXP. I was up, so again, the same things happen in futures, and you need to be able to realize what are the issues that you're having, and you need to tag how often they happen. So FOMO is a big one, guys. I would imagine a lot of you struggle with that one. So all of you should have a negative FOMO tag. one of the positive tags that I would put in, because this is something when I first got into futures, I struggled with a little bit. I would raise my stop too quickly. So let's say I'm in, and I'm just going to use numbers that make it very easy. So let's say I'm in the NQ at 20,000 and my target is 20,030 and I'm setting my stop loss at 19,980. So I'm risking 20 to make 30, 1.5 to 1. That's about my sweet spot in my trading, right? I'd get up 15 handles. I'd raise the stop to break even. Well, why? That's fear of losing. So as soon as I see a little green, I get, it's what Tommy Boy in the movie, I got it. I got to, grab onto it. And so that is a tag that I would find extremely helpful with that. And that's something that, again, if your first year of trading is all about learning yourself as a trader, your first 2 years of trading should be all about developing your risk management skills and your risk management tools, and the type of infrastructure that the futures desk provides within either, you're part of their TFDX platform and it's all there, or you're like me, I'm, the account I do most of my stuff in routes through Sierra. So it's the rhythmic feed. It's guys, there's nothing else like that out there. The ability to instantly, label your setup and then tag if it's something like, hey, I waited for my entry here. I didn't rush it. I didn't front running your own trades is something that a lot of newer traders struggle with as well. You're trying to get in for a breakout. And instead of waiting for the actual breakout or breakdown, you get in a little early, you bang your head on the top. Again, these are all things that you should have tags on. But I agree with Brian. You shouldn't just have negative tags. You should have some positive as well. So when, the last point I'll make before I turn it back over to Brian, or we'll answer questions or do whatever you want to do. One of the hardest things as a trading educator that I find to explain to newer traders, right? You inherently learn this if you've been trading about 6 months, is not every losing trade is a bad trade, and not every winning trade is a good trade. If you chase something and it runs up and you made money, that was a bad trade because you just reinforced a habit that is going to cost you money and cost you accounts if you keep doing it. Similarly, if you have a solid trading plan, you say, hey, I'm playing for a breakout above 20,000. I think we're going to get to 20,300. You shouldn't be entering right at 20,000 or any of the thousands in the NQ, but that's besides the point. If you have a set stop loss and you stick to it, you don't raise it, you don't lower it. You're like, oh, I just need to give it a little more room. No, it stopped you out and you're done. That's a good trade. If you have a solid trading plan, you stuck to the plan, and whatever the outcome was, that's a good trade. So I would expect some of you to be positively tagging losing trades, maybe even negatively tagging winning trades. So again, not every losing trade is a bad trade. Not every winning trade is a good trade. So Brian, I'm guessing you agree with that, just because I'm an intensely wise person.
Yeah, on all fronts.
Also very humble.
Yeah, I don't know about that part, but so kind of going back to what you're saying, it's the same stuff we try to get people to understand is like, look, everybody's in such a hurry. And then with most these evaluation companies, they're farming resets, right? Mm-hmm. They're letting you pass the assessment to then be in another stage where the rules stay the same. So it's like, it makes you feel like you're making progress, but you're not really making progress. And ultimately passing the assessment is one step of so many more that you're going to have to do. And if you don't have a good foundation, you're just gambling. And gambling, unfortunately, in what we do is very, very common. And sometimes it's rewarding. Sometimes you can make all the wrong decisions as a trader and you get rewarded significantly by the market. The market comes along and goes, here you go. Here's a huge stack of money for making a really bad decision. And now you're like, no. I think averaging in is great. DCA is awesome, right? And then guess what? 2 weeks down the road or a day later, you try the same thing and the market steamrolls you. And it's like, okay, got it. So you gotta think more of, how do I build a really good, solid foundation that lasts beyond just a couple of weeks, lasts beyond just getting past the assessment, right? You got to look at the bigger future that you want for yourself and be like, hey, I need a good concrete system. And that system must include a good strategy, a good way to manage your risk, understanding risk of ruin, how long you need of a runway to be successful. Like all these things people don't think about. They just go on and see all these people making all this money. And it's like, well, how much money are they risking to make this money? And are they just getting lucky through, this single stage? or are they long-term successful? And in most cases, they're not. They're gambling. And, we're trying to get people to understand, like, let's build a foundation and let's get you on the right track. Because look, if you talk to traders that have been around for more than a couple of years and that are successful, they are doing the things that we're trying to encourage new traders to do. They're doing the things like tagging. They're looking at the data. They're back testing. They understand risk. They focus on risk, not the outcome of a trade. And people are so like in a hurry to get somewhere that they're never going to get there. They're like falling over themselves to get to where they want to go. And it's like, you're never going to get anywhere if you never really just settle down and make a plan to actually be successful. And, that is what it is. So let's get into the questions. We don't want to take too much time. So I think we have a specific question for you, Matt.
Yeah, I saw that. So Chandler, thank you for the questions. I think I answered the majority of that in my little rant there. But I would say, what's one thing you would tell a newer experienced trader to grow? And I think, honestly, Brian just nailed it. Don't be in a hurry, right? Don't like, I'm a big goal setter. I believe in setting goals and having steps to work towards those specific goals. I have that for my business. I have that in my trading. I have that just kind of in general, right? And so I would say especially for the first 6 months of your career, be process-based and instead of profit-based. And additionally, I would say in those first few months, learn yourself as a trader, right? And I'm a big believer in building a trading business as well. And what I mean by that is, like, so many people just go in, I'm buying, and again, there's different like pricing models across the industry. I particularly like TFDs because you're going to pay a little more upfront in general, but they're not going to be dinging you down the line. You're not paying $200-300 every single month to renew your account. If you're not in a failing state, it's a very nominal fee, basically just covers their exchange fees and their data feeds. And so you get into this situation where you have subscription anxiety, right? So guys, trading is a business. If somebody came up to you and asked you, a friend that you trust, like not your crazy cousin or uncle who's always asking for money because he's going to be the next great inventor of this or whatever, right? But somebody you trust, if they came to you and asked, hey, for $10,000, you can get in on this business idea, you're going to want to see a business plan. So if you're going to spend a ton of money on accounts and resets and education and all that, why do you not have that? It's a business, right? So you should budget X amount per month. Say, okay, I'm allowing myself, I'm buying a TFD account this month. I'm going to allow myself only one reset and my 31-day fee. So, $100 to $130, depending on how that's all constructed. So you've got that money set aside. So there's no anxiety when that rolls around. I will say this, guys, the other thing I would say to inexperienced traders, and unfortunately we see more and more of this, and Brian touched on it with the gambling. And guys, there's an incredible crossover between the traders and people on like online betting apps and things like that. If you have more than one online betting app on your phone right now, I would highly encourage you to reevaluate quite a bit of, your money, you do what you want with it, but that mentality is not going to lead you into trading, right? And the risk reward and the structures of that reward system is not compatible with trading in my experience, because there's just, it's all luck at that point, and the deck is quite literally stacked against you in that. Whereas with trading, yeah, you're up against the big boys, but as was pointed out in the comments, you're really only competing with yourself. So take your time. Don't let there be any urgency. Set aside, honestly, guys, if somebody were to come to me tomorrow, I would say set aside $1,000 to fund an account, resets, data fees. You may want, like me, to use Sierra Chart. Okay, well, that can be $30 to $50 a month, depending. Budget out about $1,000 worth of expenses over about 4 to 6 months, and then don't stress that part of it, and then just concentrate on your trading and tell yourself, I'm not gonna see any profit for this for at least the first 3 or 4 months. Now you might, and I hope you do, but people have these just unrealistic expectations and unrealistic goals. They don't meet them. And then that creates, again, as somebody was bringing up the micro traumas. Yeah, that creates those scenarios. Now, guys, the first 6 months of my trading career was nothing but negative feedback. And it took me almost 2 years to break out of that, not only from a profitability standpoint, but from every single trade going, well, I'm just giving money to the markets. This isn't going to work. And finally, you know, even despite that pessimism, I had a system that worked over time, but it takes time and energy to develop confidence in that. And I just want to read you guys one thing here. This is something, as I was putting together a presentation a couple weeks ago, has kind of become the mantra that I always say at events, in courses, anything like that. It's not a mission statement because it doesn't really describe what we do at Torissius Trading, but it's just this. If you can master a repeatable process for identifying high probability trades and executing them with confidence, you will become a consistently profitable trader no matter your current skill level. I'm going to put that in the chat, guys. And I want you to copy that. I want you to put that in a note or something, and just understand that's what you're shooting for. 2 things: identifying high probability setups, trading them with confidence. And the confidence comes from putting in the work and trading them. You're not going to have any confidence in the system until you've traded it 100, 200, 500 times. Okay. And you learn what works by tagging your setups, tagging your trades, and all the, you know, I FOMO'd into this trade. Okay, well, you know, then the problem wasn't your setup or the system. It was you didn't execute it correctly. Too many people will, like, I teach strategies, guys. You know, I teach courses and stuff with strategies. And somebody will then email me and say, well, the strategy doesn't work. And I'll say, okay, how are you doing it? And then they'll send me their journal and say, well, you're not following the strategy. You're getting in too early, you're getting in too late, or exit, whatever the case may be, right? So, you know, you don't know if your playbooks are the problem. If you have playbook A that says, okay, on a break here, I'm in, but you don't follow it, you don't know that it works or not. And you can't begin to fix the things that are broken until you specifically know what they are. And that's why things like the real-time journaling, the tagging of the trade, the routine stuff in the morning, I love that. I make use of that, guys. You're paying for it. Make use of it. Let me issue you a challenge right now. For those of you that have a TFD account or are about to get one, I want you to do your morning routine, label your setups, and have at least 3 positive or 3 negative tags, and use them, and do that for a full month. And I can pretty much guarantee, I can't guarantee it's going to fix all your trading in anything if you're not consistently profitable. But what I can promise you is at that point, especially if you're somebody in that nice sweet spot, 5 to 7 trades per day, oh, I didn't even know you had that challenge up there. This was kind of off the cuff, but yeah, hey, great minds, right? But anyway, after a month, you're going to have enough data. So they say you trade 20 days, 5 times a day, it's 100 trades. That's still a small sample size, but it's at least enough for you to say, I'm beginning to notice patterns, and then be cognizant of those patterns as you continue to trade. So unless Raj just typed that up, man, then you're really in my head.
No, that was there prior to. I saw it. It's just, look, we've all been in trading for a while, so we know, especially you're coaching a bunch of people, I'm coaching a bunch of people. We know what traders are doing. We know how they're failing and why they're failing. And I just wish people would really understand how important the journaling stuff is. They sleep on it. They don't understand. Like, look, I can give you a strategy right now that works, that I can trade as a trader, but doesn't mean you're going to be able to make money on it. Like, that's the issue, is like, one, maybe because your psychology, you just won't be able to trade it. And that could be, look, it requires, a max of 2 trades a week, and the win rate's 42%, right? Very profitable. It's a 5-hour return. Huge profitability within a year. However, in the meantime, that trader has to potentially, during that time, calculate the risk because of, the possibility of a 42% win rate, losing, up to 8 or 9 times in a row, right? Can a trader handle that mentally? And then when it finally works for them, hold that trade all the way to the 5-hour target, right? Not many traders can do that. So that's where it comes in, to do the data digging, to understand, like, does my strategy match my psychology as a trader? And you do that through data digging and tagging and understanding who you are as a trader. And it's really about that process versus the actual trading itself. Because once you find a strategy, it's got to fit you. And then once it does fit you, you get better over time. You understand where your weaknesses are. And then you can work on those areas and maybe even avoid those areas. And that's how you get better. You know, a lot of people think that the assessment is their problem. So they go company to company looking for the best assessment, the best return on value. It's like, you're gambling. You're not making any progress by going to another assessment. Yeah, you may pass the assessment, but then you fail it and then you're looking for another assessment. What are you gaining by doing so? Nothing, right? So I dare everyone, you know, most people in here probably have an account with us. And if you don't, I dare you to get an account with us, not a full assessment. Go into a practice account. It's like $19 a month. You don't need any fancy platform. You don't need anything. And force yourself for at least a month to trade your setup, to trade and identify your tags and actually make a difference. Don't trade for the P&L. Trade for the process, right? That's a challenge for everybody. Don't worry about making the money. Worry about figuring out what works for you and actually getting better. Going place to place and recycling assessments isn't doing anything for you. If we release an assessment tomorrow that's free and you could get funded, you're still going to fail. Even if we, you know, it doesn't matter what company you go to or how easy it is to get through. The long-term objective should be sustainability, right? And getting lucky and going through an assessment isn't going to get you there. Using the tools, having a system, and doing the things you don't want to do, the not fun stuff, back testing for hours on end, right? That's all the stuff that makes the biggest difference in your trading, and people don't tend to want to do it. And honestly, put in the work, because when you put in the work, you're going to get measurable results. And that's really what's important. I think it's time to do the giveaway. I think we got enough likes. Raj, is that correct? Raj?
Yes, we did.
Awesome.
Let's do the giveaway right now.
Cool. Did everybody have, I saw somebody said they had an issue with the link. I just want to make sure everybody had an opportunity to get into the giveaway.
Yeah, I saw that comment. I checked the link. It was working.
Okay, cool. And again, if you've won before, please let us know, because you cannot win again for like 90 days. Like, we had one guy, I think, win like 3 of them between different communities. It's like, come on, guy. Like, you got to let other people also have an opportunity, you know? Hey, Sean, for the coaching, you could absolutely reach out to Matt. He has his own fully fledged coaching program. I can tell you right now, it's going to be way more detailed and structured than anything I'm going to offer. Most of my coaching efforts go towards our funded traders and people that reach out for help. But reach out to Matt. I'm sure he can post a link about the coaching he offers and the systems he offers.
Yeah, thank you. I appreciate that. And so basically, guys, just Matt at TiresiasTrading.com, TIRESIAS trading.com. I'm actually in the process of scaling up a bunch of new offerings on my website right now. It's going to take me the next couple of weeks to kind of get all those on. But if you want to work with me, I'd love to work with you guys. Just email me, and either I'll keep you informed of what I've got coming, or if you have some very specific needs, I can put together a program or a package for you to help. But yeah, I've been doing this for about 10 years now. I've worked with about 300 traders in one-on-one settings. But yeah, I would encourage you also, especially as you're going through the program, to make use of the free coaching, once you get into funded at TFD as well. Both Brian and Josh are really good with that kind of stuff, because they have, one of those things. So I have years of experience that maybe they don't quite have, but what they have that I don't have is so much data between now and places they've worked before, and just contacts in the industry to know what, and they've helped me become a better educator through a lot of that as well. So if you're looking for some very basic assistance, I would encourage you to check out what's going on at TFD. If you want a little more comprehensive stuff and some help with some setups and stuff like that, email me, and I will, as things get, I'm about 2 weeks away from having a bunch of new stuff on the website, because we're scaling up some of the stuff we're doing after a couple of years as a little bit of a startup. So reach out to me. I'll be happy to keep you informed, or just, if you're just looking for a couple hours of coaching, I can help you there too.
Awesome. Looks like we have another question. Yeah. So the 30-day renewal, I think this was already touched on. It doesn't reset the account. Okay. So the mindset behind what we're trying to accomplish, right, is one, we don't want people resetting. And I think people, they think that resetting somehow is a positive thing, like, or not having a daily loss is a positive thing. And they always compare us to other companies. And it's like, you're not comparing apples to apples, right? We're not the same thing. One, we're putting our traders on guardrails. The reason behind that is because we're trying to get people that are gambling out of our ecosystem. Don't come to us and think that you're going to gamble your way through, because it's not going to happen. We want you to slow down. That's why we give the option of 12 days, and then people get upset that it's, 12 days, but we also have an option for 5 days. But I can tell you that the point of what we're doing is because we want to ensure that the trader's adhering to a good risk management plan and not YOLOing, right? Because the traders that I know, and I haven't met a lot, but most of the traders I know that are, extremely successful, there's all levels of success, but their P&L isn't this, right? It's this, right? And when people get into assessments because of the way these other companies handle them, their P&L is this, right? Your risk of ruin when you trade with that much size, you're giving yourself no opportunity for long-term success, right? If you're gambling, these other companies are great because they love gamblers. They want you to go in there. They want you to sign up for 15 accounts, 20 accounts, because they make 20 times the money. And then they'll let you pass the first phase. But then guess what? The second phase, of course, has more rules and you pay more money on the next phase, right? So all they're doing is shifting the rules around, where our first phase, yes, absolutely, it's harder. But we don't have a secondary phase that has consistency, doesn't have other things. And then we're moving you into a live brokerage where they're not, right? In most cases, they have a rule that prohibits you from taking a payout for 30 days. With us, you can take a payout literally if you perform perfectly. I'm not saying a lot of people meet this threshold, nor am I telling people to do it, but you could literally get a payout within 6 days of when you sign up to the time you pass, your buffer period. You can then be taking a payout. There's no other person in the space that I think of, that I can know of, and I could be wrong, that you're going to get a payout that quickly. It doesn't happen, right? They're just structuring in a way that on the marketing, it seems amazing. But in reality, they're looking to attract gamblers. They want you to reset. So guess what? Resets are unlimited. There is no cap. Me personally, I was at another company where I saw people spending $3,000 on resets in one day. How does that help the trader? Oh, wait. It doesn't help the trader. In my background and what I used to do is I would protect people. People that would not be able to protect themselves or be in a really bad position. I would, it was my mission to make sure there was justice for that person. And when I see stuff like that, where I know, and I've met gamblers that have lost everything, lost their marriage, lost their house due to gambling. And I went to those houses and saw what it did to the family. Like, I had that firsthand experience. So and what I mean by that is, look, we're trying to protect traders from themselves, because they're not understanding that when you sign up for 20 accounts and you reset all 20 accounts 15 times in one day, you're not making any progress as a trader. You might as well just be in a casino and bet red or black, because you have way better odds making money in a casino than you do in the market if you're trading that way. And sorry to get into this big spiel, but going back to why we do the model that we do is because we want people to slow down. So by slowing down, we let and encourage people, look, $29 basically renews your thing. And it allows us to cover data costs, exchange costs, right? And most of these other companies charge you, the full amount or whatever. We don't do that. But we also don't reset the account, because look, we don't ever want somebody intentionally trying to reset their account. Right? That shouldn't be in your mind. Is like, oh my gosh, renewal's up. I need to go blow my account up so I can reset it. No, we made our resets very cheap, and we also limit our resets to once a day, right? That is where, one, if you reset, you're on a cooling off period because you should not be trading again, right? And then through the renewal, that renewal is just to allow you that mental freedom to know, like, I don't have to pass this account really quick, right? There's no extra stressor in your trading. It's just $29, and it covers my data. It covers my fee. It covers my test accounts. It covers all that stuff. And that's what's important. I know, super long-winded, but just kind of very passionate about it. We talk about this stuff for hours and hours and hours internally. And yes, having limited resets hurts us as a company, but we don't care. We want to help the trader, and that's through placing guardrails and prohibiting gambling type behaviors and providing them the tools that actually make a difference for traders. That's the reality of it. Us adjusting our assessment doesn't help the trader to trade any better. Our tools do. So I hope everybody understands that the tooling and the education and the coaching, all these things that we have in place to help traders, that's what's actually going to make you a better trader.
Well, and I would go a step further with that as well, Brian, and saying it is, I mean, Futures Desk is a business. It's like a lot of other places out there. It's like my company. It's like you're in business to make money, but how do you make your money? What is the ideal client for a place like the Futures Desk? Well, quite frankly, the ideal client for them is somebody who, it doesn't matter how long, but makes it through the assessment in the buffer zone and then is consistently profitable in a live account, right? As opposed to, a company A that has, let's say you're able to have 20 accounts, you got to pay $100 to activate each one of them, whatever, right? Their ideal client is somebody who's churning through activated accounts, whatever those look like, right? Whereas the customer avatar for a place like, I'm pulling the curtain back on the business a little bit, a place like TFD is people in live accounts being really successful. So it is in their best business interest to have live traders being successful. That's not necessarily the case at other places. So, I mean, listen, I've gotten to know Josh and Brian and Raj and the team over the last about 2.5 years that I've been, doing some stuff with them. They're really good dudes. I like talking with them. We have some really fun off the record conversations, about trading, about life, whatever. But they're in this business to make money like the rest of us. But how do they make money? They make money when you're a successful trader, which is why they spend time and money building things like the tagging system, the real-time journaling, all of that. I know jack squat about programming, but I know that stuff was not easy to accomplish or pull off, right? Because if it was cheap and easy, every company would have it, right? And sure, some other companies may have, okay, at the end of the day, you can see this trade or that, and they have some basic statistics, but nothing this comprehensive. So again, they are interested not in having you as a churning client, they're interested in a business relationship with you. And so they're going to provide you a lot of tools to be successful. And, whether it's stuff in-house or they bring in people like myself to help out in certain situations. But again, it is in their best business interest for you to be a long-term successful trader, which, guess what, happens to be in your best business interest as well. So it's a business relationship. I've been in a lot of business relationships in my life. I always want to be on the same page with people. What makes you successful makes me successful. So I will say they're a lot more altruistic than a lot of the companies out there, but at the same time, they want to make money, but they want to make money with you being successful. So keep that in mind. That's why they're taking away things like subscription anxiety. That's a real thing in this business, right? So as opposed, don't rush through things. Okay, $29 at the end of the month. That's basic. Well, shit, that's almost what Netflix is now if you want to get their highest end plan, right? And instead, you're going to get another month to build out your account and resets. What I think are 75 now across the board, if I'm correct on that, Brian.
Yeah, it's 75 and it extends by 31 days. So
Yeah.
It's not like in other companies you reset and then you're not getting an extension and then you get your rebill at the same time. So let's say you just reset, it was like 99 and then your rebill comes and it was like 100 and whatever, right? So they're double dipping in that area where we're like, no, let's just make the reset, extend it, and then they don't have to have the anxiety of, well, when's this going to end and when's it going to rebill? We're trying to make things easier. And we're trying to help traders to manage their risk even when doing assessments, right? We're trying to have them not sign up for 1 million accounts, not have them reset a bunch of times. And it's really getting them into the habit of even understanding, like, I need to manage my risk even when signing up for assessments, right? I shouldn't be burning $3,000 in a day, which literally $3,000 could probably take your family on like a in-country trip somewhere like that. That's a lot of money for a lot of people. And it always made me feel sick when I would see that. I was like, I would reach out to him and be like, hey bro, can we talk? Or like, and normally they'd want to talk because look, it's embarrassing. And it is, in a lot of senses, it's an addiction. So things It's not always the assessment that's the problem. Please focus on the process. And if you're not ready, then stay in a practice account, because look, until you have a good strategy, you should be in a practice account anyways. I know you want to start making $1 million yesterday, but that's not the reality of trading. And I know that's what's portrayed online, but that's not the case. I've met hundreds and hundreds of traders, hundreds of them, maybe even thousands of traders. And you know how many that have just taken off and made millions of dollars? None. Like, that's not how it works. It takes years and years of dedication and commitment and learning what to do and building a good solid system, and then understanding your system's not always going to work. So that is trading. It's not gambling. And if you're looking to gamble, we're not the right fit for you. Absolutely. But if you're looking to grow as a trader, we were 100% the right fit. If you want to get better and understand how you get better and understand the data behind what you're doing, TFD is a place for that, right? Sometimes you get hyper focused during trading and won't be able to exit. Yeah, been there, right? So hyper focus, or basically where you're self-talking, you're like, hey, I need to get out of this trade right now. And you're like, I know I should be out of this trade right now. And you're watching it go against you and you're paralyzed, right? That's basically something, when we talked about this in the beginning, you have to, after each trade, winner or loser, go through a head-to-toe assessment and try to figure out emotions. And then do that for each trade and figure out, is it after 3 or 4 trades in the positive, using my logical thought process? Or 2, is it after a series of losses where I start losing my thought process and my logical thinking? And it could be a combination of both. And then additionally, that could be a sizing issue where you've taken on way too much size. So now you're paralyzed to getting out because you're like, oh my gosh, I don't know what to do. I don't want to take this loss. And then you hold it and it only gets worse, right?
I would be willing to bet 90% of that problem is oversizing. However, whether it is or not, here's a couple of little tips and tricks, right? So first of all, plan your trade your plan. Okay. You should never be ever getting into a trade without knowing where your stop is immediately. Okay. Before you get into the trade, you should know exactly what your stop is. Okay. Here's a technique, guys. There's times where I sit down in the morning and maybe, whether it's trading related or non-trading, like life always happens, right? Where sometimes, maybe you just wake up a little more anxiety on that day. There are still times, this doesn't happen to me much anymore, but especially when I first began to trade futures with my real account, I would have some anxiety getting into trades, even in small position sizes. So I plan my trade and trade my plan. So what I would do is, let's go back to the NQ example. And I'm going to be, now, first of all, on the upside, I always scale out of trades. Right. Unless I'm just doing one mini, I'm scaling out. So what I would do in this situation is I'd get into the trade. Very first thing I do after I execute the trade, if I haven't already done it, is set my stop. Okay. Then I will set my first profit target. So again, let's use an example. I'm in at 20K on the NQ. My stop is 19,980. Let's say I'm in at 10 micros. Okay. So what I would probably do at that point is exit 6 at my first profit target and let the last 4 run and see how they do, or even half and half. Doesn't really matter for the purpose of this mental exercise. At that point, you know what I do? I get the trade off my screen. I've got my stop set. I've got my first profit target set. Either I'll put something over it, or once I hear the whatever, depending on what platform you are, whatever, whether it's Big Woods with his order filled or whatever the case may be, right? You hear that, get back and manage the rest of the trade. If you're stopped out, you're stopped out. Clear your orders, make sure everything's off the board, move on to whatever's next. If you hit your first profit target, then I slide my stop up to break even and I'll let the rest run. I'll usually give it another, sometimes as little as 10 handles, sometimes as many as 30. But at that point, once I've set my stop and my initial profit target, my work is done until I hear a ding or some sort of order filled. Right. I don't have to do that as much anymore, but there's still some times where I sit down and maybe, especially recently, the market's just as crazy as they've been. There can be more anxiety in trading. So do the work of the trade before you get into the trade. And then you don't have to sit there and scream at yourself to get out of a trade. You're out of it. My guess is position sizing is playing a big role in that. But even if it isn't, even if it's just a single micro or a couple of micros, set your stop, set your profit target, or at least an initial one, and then get it off your screen. and let the trades execute. When you know it executes, go back and see what happens, journal, do whatever you need to do. But if you can't rationally manage that trade, watching it tick by tick, don't watch it tick by tick.
So to follow up, he's saying, you know, the habit, but once you're in that zone, look, I don't have a solution for you, because once you're in, and we call it like the monkey mind, where you're just like crazy and you can't control it, and you're just another, your family, you're so heated, you're not thinking rationally, you say messed up stuff. It's the same thing with trading. Once you're in that zone and you're just so consumed by your emotions, you're not going to be able to be like, oh, time out, I'm done, okay, I'm good. Literally, you're probably going to hit your max risk on the day. That will stop you. Now, if you set that max risk on your own and you're able to change it, I've actually gone to the point where I've been so mad and upset that I would go into Rhythmic and change my max risk settings. So what I learned is, when I got my actual brokerage account, you know, years ago, I just have a hard stop at the brokerage and they know not to adjust it. So that's an emergency stop, right? But that's what you need to do, is you need to place something where if you do, you know, go through where you're supposed to and you're holding it, you have an emergency stop. You have a plan if everything hits the fan, right? And that's what's really key, and what's really important is understanding, like, sometimes if you're in that mode, you can't snap out of it. I don't care what you do. Somebody, your wife or husband could come over and be like, hey, and you'd be like, no, get out of here, I'm in a trade. Like, that wouldn't stop you, right? You got to basically stop it before it starts. And that's through doing the head to toe on every single trade, documenting what's going on, and figuring out what your threshold is. So you stop before you meet that threshold. And before you meet that threshold, you get up, you go outside, and you reassess. Because look, you could be mad at your wife or husband for hours, for days, right? The same thing with trading. You can feel those residual emotions that will impact your trading for more than 30 minutes, 40 minutes, or whatever, right? So you got to redo a check to figure out, hey, am I in a good space or am I bad space? And generally, after hitting risk or getting into that tilted state, you're not going to be in a good state sometimes for days after. But you got to look in and look inward and be very self-centered to realize that. Because if not, you're going to come in the next day, you're going to get upset again. And guess what? You're hitting your daily stop again, right? It's a vicious cycle. And that's what happens when you start trading your emotions instead of trading your plan, like he said, right? Got to have a plan. And that plan should include, what if I get into a trade and the market hits me in the face, right? You got to know what to do after. But I don't have any good guidance on how to stop it once you're in a tilted state. Yep, one practice account, one practice account. Look, you know, that's super important. And I think people want to sign up everywhere because they think going to a different assessment is going to somehow help them, right? Oh, if I go, you know, to Top Step, or I go over to Apex, you know, it's going to help me do better. And it's like, no, you're going to another casino. Like that's not going to change your odds, bro. It's like going to the Vegas and going to a slot machine and thinking that you're going to hit on this slot machine versus another slot machine. The odds haven't changed. Nothing's changed. You need to take a deep dive and look at how you're trading and build a good process. So regardless of where you go, you're always going to be passing, and not just passing, but at finding sustainability long-term in a funded account. That should be everybody's main goal, is like, I want out of this circus. I want into my own funded account where I can continue to grow and take money out every day, every week, every whatever, right? That should be the dream, not how do I pass my next assessment, because that's just part of the game. It's not the big part of everything you should be doing. It's just one part. Tag multiple orders. Okay. Yeah, we added a feature. We didn't really announce it, but if you go into your dashboard, and unfortunately I logged out of my account. Raj, could you stream that? Let's see if you can stream it. So for now, I'll just explain it. In essence, we added a feature called scalp mode or group trades by time. And the scalp mode, more or less, it's a toggle switch, right? Me being a scalper, I know generally I'm stalking a particular area that I find interesting. And then I use triggers to get into that trade. And those triggers would be like, reloading on the order book or speed up of the tape, aggression into large liquidity. But in essence, we've added a scalper mode. So if you turn this scalper mode on, any trades that you took during scalper mode being enabled, if it's all part of one strategy, but you took multiple entries or something like that, when you turn it on, you're able to tag all of them together as one group. So you could take 30 trades while scalper mode's on. And once you basically click it on, it would group all those trades together. And then you could tag every single one of those trades as one trade and put all your setups on that one thing, and then unclick it, and then it ungroups them again. So it's a quick way to do it. I don't know if it's the best way, but it was the best way we came up with, where people can still utilize the tagging, where they don't feel overwhelmed because they have 40 trades and they don't want to have to tag 40 different setups. It lets them put everything together, tag it all in one, and it's the most efficient way. I'm glad you like it. I love to hear that people are using the scalper mode. I know we didn't do an official launch. Josh is very particular in when we launch stuff, how it's launched. He's very oriented towards perfection. So he didn't want to do any official release on it. We wanted to see if people were utilizing it, if they enjoyed it, if it was working as intended. So give us the feedback. We love to hear the feedback on it. I think it's working well. So I think we'll end it here unless anybody else has any questions for us. We try to wrap these up around an hour. So questions. Anybody else? And that could be questions about the firm, why we have certain rules, all the things we've put into play. I can tell you we thought and worked through those and argue about those things. And we always lean towards what's best for the trader. And we try to balance, right? So if you guys have any questions about that, or nope, I guess not. We do have, and this is kind of a preemptive thing that we're going to be doing. We don't actually have the official sale yet, but we are having a sale. It is not a typical sale. So in essence, we're going to be making all of our accounts, even the EOD accounts, at that pricing. All accounts will be static accounts for limited time. That's the next promo. We figure this is going to be a smaller promo. And the reason we kind of put a hold on sales and we have some other exciting things coming, we really wanted to provide some time for our development team to hash through some back-end stuff that's going to make answering questions and helping customers a lot more streamlined. And we just wanted to become more efficient in the back end before we decide to grow more. Like, we need to slow it down, not bring in a bunch of new people. And the reason behind that is we want to maintain quality, right? And we also have some other things we want to make improvement wise, and we don't want to have a bunch of cells running at the same time, because then everything gets super busy and then we're scrambling. And we want to make sure quality over quantity, right? That's our main goal. So that is the next promo. That promo will happen probably tomorrow. Raj will send something out, and again, it's going to be in essence, every account will be a static account. So feel free to sign up for an end of day account, and that will be transitioned free to a static account. So it's like getting a discount on a static account, pretty substantial discount on a static account. And that's what we decided to do. Cool. Hello. I don't think that's nothing else going on. So I think we're done. We're going to wrap up. Thank you so much for joining. I'll do this too. It's cool. Thanks for joining us, and we'll see you next time. And we also did have a discussion about potentially in the coming weeks, and that's dependent on my commitments, but maybe doing some type of live stream where in the morning I go through the entire process of how I approach the market. And the purpose of this is to help people build a really good foundation and a good approach to viewing the market each day. and to one, identifying a setup. And I'm going to do some random setup. It's not going to be a profitable setup, but the purpose of it is to practice getting into a routine each day and getting into a process of trading and not worrying about the outcome of the trade and only worrying about, did I complete my process? Did I trade the way I was supposed to trade? Did I actually succeed as a trader? And I think we potentially might start doing that. It depends on interest and what my schedule looks like. But thanks, everyone. Thank you for joining. We'll see you next time. Always, trade well and respect the risk. Risk is above all.